And Simon, how you doing, man?
Yeah, good. So I think last time we saw each other was in Cancun at Satoshi Roundtable, and the world has changed.
Right.
So I'm Simon Dixon. I spoke at the first Bitcoin conference in the world. I wrote a book called Bank to the Future: Protect Your Future Before Governments Go Bust, which was the first published book in 2011 to cover Bitcoin. And I run a company called Bank to the Future, and through Bank to the Future, I'm a shareholder in over 100 different crypto companies, from Kraken to Coinbase to Bitstamp, Bitfinex, blockchain.com, Circle, and many others.
All right, cool. Thank you for that. What is your outlook for Bitcoin? You've been doing a lot of publishing a lot of short videos on your views on everything. So let's start with Bitcoin first, and then of course we'll cover traditional markets as well, which is also your experience.
Yeah, I mean, obviously, I've been a long-term Bitcoin bull from the beginning. I used to be a market maker on the London Stock Exchange, but since then I haven't been trading. So I tend to shy away from short-term outlooks. But nevertheless, I think we had a jump. Yeah, obviously, we saw a massive jump to cash in every single asset, a flight to safety, as this health crisis started to dawn upon people that this is more serious than they were taking it. And eventually, I think we start to see that people start to see how the utility of Bitcoin and what it was actually designed for, the ability to give you the ability to own your own money, which you can't at a bank, the ability to spend your own money, which you can't at a bank, and the ability to have a quantitative tightening rather than a quantitative easing like we see in traditional money, where there's a fixed money supply. I think that the world is going to produce more and more examples of how people are going to realize that it's important to own their own money, spend their own money, and have a fixed money supply. And therefore, I think we're going to see more people coming into Bitcoin, not just for speculative reason to protect their wealth and assets, but also for genuine utility, that they actually want to use it as the world starts to show. So I'm forecasting a major financial crisis after this health crisis. Obviously, the government's had to chuck absolutely everything at it to get on top of this. And I think that leads to more people experiencing what Bitcoin was designed for. The reason I've been getting a bit of attention recently is because on my YouTube channel in 2010, I uploaded a video called The Great Depression of 2020s. And I completely forgot that I created that video, and somebody brought it to my attention, and I've been creating almost like I've documented since before Bitcoin to today, and the whole journey of Bitcoin on that YouTube channel. And so I decided to get more active because prior in 2019, I was giving a lot of commentary on a real black swan event that I think will happen in 2020 that will expose the systemic risk of our financial system and banking system, and drive the central banks to create their own digital currency to bail out the banks and allow the banks to actually go bust this time. But so I've been giving a lot of commentary on that because throughout 2019 I was speaking very aggressively. Obviously, I had no idea what coronavirus was and that we'd enter a health crisis. But it turns out that a lot of the things that I've been talking about over the years are actually unfolding right now. But so I'm long-term bullish on Bitcoin. I still remain long-term bullish on Bitcoin. I've been buying into the dips in an environment where I've been trying, I hold still in fiat terms. I hold most of my wealth in dollars rather than other currencies. I live in the Isle of Man, so I have to spend pounds. So I hold some of it in that. But I've also been looking at withdrawing cash and forecasting governments are probably going to make cash illegal over the coming months, especially as some of the cash is actually might be contracting the coronavirus as well.
There's definitely a drive to eliminate cash. I mean, that part's been in my presentations going back to the first time I gave it, I believe at Acapulco back in like 2015 or 16. My first presentation, I talked about the government's push to eliminate cash and how great it is for Bitcoin.
Yeah. I just want to say one thing, though, about the cash carrying the corona. One is there's a saying on crypto Twitter that everybody puts out all the time. And this is the one instance where it's actually 100% accurate. Bitcoin fixes this.
Yes, it does.
Yeah. And the other one is time for plan B, isn't it?
Yeah. No, there's a lot of good ones. On my blog at the beginning of the year, in the first week of the year, I'm not sure why. I guess I'm running too many things on this giant live stream. Um, one of the five things I said to look out for in 2020 was statements by the SEC that they are going to be looking at the Bitcoin ETF more favorably, because I think it is time. But I do think that the biggest, I guess they have two big hurdles. One is custody, and hopefully, so let me go to my blog. So hopefully the custody will be solved by companies like Fidelity and perhaps Bakkt. They could, give the SEC some comfort as far as the Bitcoin custody. But the other issue is, and you hinted on it, is the fact that unlike the equity markets, Bitcoin's liquidity is split across all of these exchanges. Like we're being represented here with Bitcoin.com exchange, and then Kraken has its own liquidity pool, and Bitstamp has theirs. And that's not how it works in the traditional world, where liquidity is kind of pooled, and you're preventing one guy with $10 million from moving the price of Bitcoin. If all of these exchanges in the Bitcoin space were actually brokers, the way we have interactive brokers, E-Trade, Scottrade, and others, then it would be very difficult for one player to move the price of Bitcoin like it is now.
Yeah, also, I think on the plus side with the ETF is the longer we don't have an ETF, especially in times of a financial crisis, the more likely people that want Bitcoin exposure are actually going to have to do it the way where they own their own Bitcoin. So personally, I think it's a net positive that more people in a time when, holding your money in a bank will be put into question, at least get to try and experience Bitcoin the way it was originally intended. And maybe if we had an ETF right now, it would just be a bunch of people piling into the ETF, causing a centralized pool of Bitcoins that might, in these uncertain times, lead to, without an ETF, a more distributed and people actually taking the time during this lockdown to actually figure out how they can actually own their own money rather than give it control to a custodian.
Yeah, no, and you're absolutely right, Simon. And that's been one of my concerns that I've been talking about for a long time. It's this double-edged sword where having a single pool of liquidity and an ETF would create awesome stability in the price of Bitcoin, but it would potentially endanger Bitcoin's uniqueness of being this decentralized asset, because now a large pool of Bitcoin could be under the potential confiscation by a single government entity. I'll go for it.
Well, a bit of data we're seeing at the moment is obviously as a shareholder in many of the exchanges. So Kraken has had an 83% increase in sign-up rates. It's had a 300% increase in KYC. With Bitfinex, in terms of Tether, the market cap is up to 6.1 billion. So what we're seeing is a lot of USD deposits at these exchanges right now. The interesting thing, like some of the data we're seeing on Bank to the Future, is because we have a market for buying and selling some of the shares in these exchanges. Because equities took a big hit, we saw some of the equity value and valuations of the exchanges go down as people were fleeing to liquidity. But at the same time, the volume increasing. So it's creating some really interesting opportunities to get a discount in the equity of these companies at the same time as their volume and KYC increasing, at the same time as the level of USD. So what we're seeing from the data at the moment is that there is a lot of USD entering the crypto exchanges. So I think that is, the initial shock of the health crisis, people thinking that Bitcoin should have been uncorrelated to the stock market. So there was that initial shock of, oh, wow, Bitcoin is not a store of value. Led people to do a lot of panic selling, people selling Bitcoin that wouldn't have normally have sold.
And also, Simon, when people are squeezing to go to liquid, it really doesn't matter at the end of the day what that asset is, right?
Absolutely, yeah. So you have that initial shock, and as people are starting to realize that Bitcoin was designed to solve some of these problems, and as I said earlier from the Vanet guy, that he's going to be reporting some more data on the correlation with gold, that's going to be a really interesting piece of data. I look forward to seeing what that is. But as you see, the reality is that this health crisis forced the government to chuck absolutely everything that they have got at the economy, at trying to prop up the economy and support people in this dire time of need. Which essentially is a complete reset of our financial system. As people are sat at home right now, I think people are thinking about waiting for their helicopter money, deciding what they're going to do with that money, deciding that actually, screw the mortgage, I need that right now in case I need to buy food. The reality is that that's going to lead to mass defaults on mortgages right now, which is going to expose the banking system for what it is. And at that point, when you start to see policies designed at saving the banking system, that's when people start to realize I need to diversify, not into an ETF, but into an asset class that allows me to access money no matter what happens in the financial system. And people are going to realize that at different stages throughout this financial crisis.
Now, I see we have a new guest, Mr. Ugly, who I met for the first time in Las Vegas. But before we go to Ugly, I just want to get George's opinion on what he's kind of been seeing along those same lines with the volatility this past month.
Thanks, Alex. Yeah, I mean, from the institutional perspective, obviously, traders who use the machines to trade volatility is fantastic. That's where they cash out massively. But if we look at the long-term perspective, the retail investors that got wiped out, and we've seen BitMEX having the record liquidations, and this month, in the long term, obviously this is absolutely destroy the potential growth of it. But I mean, again, for the industry in general, exchanges in particular, it's been a great month, right? We've had a record volumes, despite the fact that the price of the Bitcoin went down in dollar amounts. Our volumes have gone up massively. So we need to sort of see how the volatility with introduction of sort of more institutional products like I don't know, more derivatives, ETFs coming into place, the price of Bitcoin could become more stable, more civilized, and we could avoid these kind of waves of extreme volatility, which obviously hurts the market.
I don't think we're about to see any change in volatility of Bitcoin. I think the way that people look at Bitcoin is that it's what I call a speculative store of value, i.e. the world is speculating on whether it can become a store of value. Obviously, gold is a preserver of wealth and Bitcoin is a speculative store of value. But as long as the majority, we're in a situation right now where most of the world has heard of Bitcoin. The majority of the world think it's a fast way of making money, a get-rich-quick scheme, a Ponzi scheme, a currency just for drug dealers, or an outright scam. The reason that there is a price differential between what if Bitcoin does become a store of value and a speculative store of value is simply because there's money to be made from the world not realizing that. And as Bitcoin moves from the world thinking that, what it is to discovering what it actually is, that's what creates that. And it's only then when you can start to see some kind of decrease in volatility as it can potentially reach some of the median of exchange and unit of account properties later. But I think we're really far away from that. And that's what's going to excite lots of the traders to this market. I think Bitcoin's going to be ultra volatile for a long time.
It will be, in fact. But
we just broke 1,000 live viewers, guys. We're over 1,000 live viewers watching us right now. All right, let's get ugly in here. So the original question was, has Bitcoin bottomed? And I believe, Ugly, you and I discussed this a couple of weeks ago, and both of us believe Bitcoin has bottomed, and it's up we go. it's rising a little bit higher and a little bit faster than I thought it would. But I've been a big bull for a while now and remain so. And I'm pretty sure you're with me on this one.
Yeah, the basis and backwardization called it again. I mean, it didn't give you very long to get in, but you know, we took futures down there at $1,500 over under spot, which was just incredible. I mean, I kind of got lucky because I'm like everybody else in the world, I got wrecked on the way down, but I immediately, you know, I know enough that when I get wrecked a couple times a year. When I do, I put money right back into it, and I come back in, and it's sitting there at $3,200.
And I hate the way you use the term wrecked. I mean, you can get the way you use the term wrecked, you can get wrecked 3 times in a month, and you're still gonna come out on top by the following month. Like when most people get wrecked, they never trade again.
Well, yeah, and that's, I mean, this is such a classic case of poor money management, and there's no excuse for it, particularly with these derivatives type. I mean, we have innovation in trading, which is just incredible. I mean, come on, guys. I used to trade futures. I posted the old silver chart when Hunts blew out. It was limited. You couldn't get in or out. It was untradeable. And these markets are liquid. And if you get blown out and you're completely wiped out, it's just because you didn't manage your funds right. I mean, it's that simple, because there's no excuse for it. You should never have more on an exchange than you can afford to just completely throw away.
Yeah, no, and that's true. I mean, I know traders that literally got wrecked during 9/11. They were like long airline, they were like long oil in the futures markets, and they were like hedged with like other assets, and they couldn't get out. Like they had no chance. Like it was just over.
No, you can't. And that's the difference between what we have now and the futures market. You can't, I mean, every time I say Arthur Hayes, I take my hat off to the guy, because he's given so much innovation to the markets that I get. And people, this generation doesn't understand how great these markets are, because you literally can, I mean, I used to get hooked, and I would not only lose everything in my commodities account, but I'd owe another $500,000. And then you're sitting there. Sometimes took me several weeks to meet the margin call just so I could get back even to trading. So, this is the whole, like I say, the key to successful trading. This Bitcoin is a speculation, guys. It's a lousy store of value, and it sucks as cash. It just is. I mean, there's no way you can say that Bitcoin's a store of value. And yet I recommend dollar cost averaging. I put every government entitlement I get, I put my Social Security. Ever since I started collecting Social Security, been putting into Bitcoin. It's made me a Bitcoin millionaire just by saving $1,000 a month, since the peak, in 1915. But you can't, look, we're not going to get stability in Bitcoin until you have free market banking emerge with the free market in Bitcoin. Because what you need to do is we need to have banking regulates the money supply. And by having free market banking, which is really what E.C. Harwood outlined it as self-liquidating commercial paper, that's what regulates the money supply. It's not Milton Friedman's monetarism, where you inflate it 5% a year, but rather it can be inflated and deflated depending upon the market. It's called non-inflation. You can create ex nihilo. It's not ex nihilo, because you're creating purchasing media out of new goods coming into the marketplace. That's what banking is about. And that's the service that they learned to create under a gold standard. Very few people own gold. The only people that own gold under a gold standard were the banks, okay, a few rich people, and that was mainly it. Rich people and banks. The average person, they could own gold. You could have a $10 gold piece or $20 gold piece, but very few people did. They didn't need to, because everything else was priced in gold. And that's where we're going, at least on an international scale. And I'm all for. I'm very hopeful that's what's going on now. We'll see the resurrection of the governments having to compete. They all resurrect the gold standard. I'd love to see Bitcoin compete with the gold standard. That'd be the greatest. I mean, can you imagine that? Something I couldn't have ever even imagined 40 years ago. I think it could be coming. I think it could be coming.
I think
I don't think the gold standard's coming back, but you never know.
Well, it's limited. It would be limited to gold has a physical limit. Okay. And so it's going to be limited to nation states. And that's what Hayek saw. Hayek didn't see competing free market standards. He saw a free market standard competing with government money. And so
one could argue though that fractional reserve banking was a free market solution to money creation. It was where the government outsourced the ability to create money to the private banking sector every time they issue a loan. Now, granted,
they actually adopted it because it was already created by the marketplace, and then they incorporated it with the Federal Reserve Act. But it was already the bankers have learned how to do it. They learned how to create, and it's not fractional reserve. That's a big misnomer that I blame Murray Rothbard on, because he wrote the book, The Case for 100% Gold Dollar, which doesn't work. That's what we have now with Bitcoin. So you do need, it's not fractional reserve. What it is banking, that you create money that represents not, when you create that money, you can purchase not just Bitcoin, but any other new product coming to the market. Well, guess what? There's a need for a whole lot of new products now. We can't even imagine what the market is going to need after this mess.
Yeah, I agree with you. It's not fractional reserve because there is no fraction and there is no reserve. So it's a very misleading name. The reality is they create as much money as they're willing to lend and people are willing to borrow. But in terms of a movement from here, I think we're doing the complete opposite. What I see happening is that governments have had to chuck record levels of money like we've never seen on a scale in order to overcome this health crisis. When individuals start to default on their mortgages, it will expose the weakness of the banking system and private created money that was issued as debt. I think the government's reaction to that is going to be that rather than let the bank go bust, rather than bail it in, rather than them have to bail in themselves or then bail out, I think what we're going to see is a central bank digital currency issued whereby central banks actually wage war on retail banks. So let the bank go bust, you download your wallet with the central bank, and if you had $10,000 in Citibank, you now have $10,000 at the central bank and the bank can go bust. And essentially we move to a form of money that's way more centrally controlled. It will be more transparent because rather than having these M0, M1 and credit creation and manipulating interest rates in order to control it. But that form of money that you're going to see from the central bank is not going to be a pretty form of money. It's really not going to be a nice form of money. If the government, in a time right now, you're doing a deal, maybe you're sat at home doing a deal with somebody in China. The government in China believes that you owe some tax. The government in America believes you owe some tax. And you're going to have two competing governments trying to automate tax collection through this central bank digital currency. Probably at the end of this virus, they're going to be asking people to get, their vaccines or whatever it may be. And we're going to have tracking on people as well, because they're going to need to see who's got the virus, who's not got it. And this is going to all be automated and integrated into the central bank digital currency. I don't think we're moving to a gold standard or anything like that. The only shot we got is competing forms of money so that people can decide whether they want to use Libra, Facebook, the central bank digital currency, money created by a bank, or Bitcoin, or whatever it may be. So I think we're moving in the opposite direction after this one.
Well, I would agree. That seems to be the most likely scenario. I guess I'm talking about my hopeful scenario. I did do a little bit of original research because I've been pretty well sick myself. I don't think it's coronavirus, but it might be. But I did look at a very similar situation in the January 1923. I didn't really realize, but France invaded Germany in 1923 because they weren't getting their reparations. So it's kind of like France was the coronavirus, went into the Weimar Republic and says, okay, you haven't been paying us what we need. Now, they've been inflating their currency slowly, but what happened is public policy changed. When France invaded Germany, the German says, okay, we are going to pay all of our people as though they're working, but we're asking them not to work. Do not do anything to contribute to these reparations, which is almost identical to what we have going on now. And it set off the German hyperinflation. Now, I don't know if that's a valid analogy or not, but I don't think it's something we should ignore.
And I just actually had a friend text me from Europe. And, you know, if you want exposure to the market, to Bitcoin, and you're not an active trader in it, is the correlation to the traditional equities market necessarily bad? You know, should the average investor be worried about that? Is it something that should be on their mind?
I'll answer that real quick. It is still the most uncorrelated thing in your portfolio versus any other sector, any other equity, anything else in that portfolio. I mean, you have the S&P, you'll have gold, you'll have precious metals, you'll probably have some bonds, and even bonds have been generally correlated with the S&P, though we do have to separate government bonds and corporate bonds. So I think it's still a good diversification mechanism, even though it will, on a grand macro scale, be correlated.
Yeah, so Bitcoin has always performed when the world starts to, or pockets of people start to realize edge cases. So, you know, the importance of owning your own money comes to life when people have challenges owning their own money, which is when you have, for example, in the past, bail-ins in Cyprus causes people to have a question whether they own their own money. When you have what I think is coming next, when people, you know, during this coronavirus, I was restricted from withdrawing a certain amount of money that I wanted to be able to withdraw. And I had to go back on repeated occasions. And so as people start to experience those problems, they start to, you know, that creates pockets of spikes as we've seen in the past. The other thing is obviously when people realize they can't spend their money as they choose. So the first highlight we had was obviously the WikiLeaks case when they were obviously, you know, taken, well, barricaded from financial, and people start to question whether you can spend your money. Now, what I think we'll see in modern day times is all three of those things happening at once. So you'll have restrictions on you trying to access your cash. You'll have you realizing that if you try and send money to a Bitcoin exchange from your bank account, you might get pushback. And so people realizing that their money is censored. And then at the same time, when you have what we're having right now, which is excessive money printing, excessive money creation, then people start to question. And so when you have all three of those at the same time as, you know, the government's trying to prop up the stock markets again, people realizing that might not necessarily work this time, then you start to, I think you'll start to experience a decoupling in terms of the immediate effects that you'll start to see.
I want to talk about the traditional markets a little bit. And like, what do you think we're headed? Do you think we bottomed? Like, I mean, I live and breathe the Bitcoin markets for the last 6 years, and I'm pretty confident that Bitcoin has bottomed, but I'm not sure about the S&P yet. And there were recently very good, interesting charts. So one of them is this one. I can easily do an update to this because the S&P market bounced over 20% over that week right before this graphic was taken. And it's being compared to two potential prior similar crashes, one being the 1929 and one being 1987, because we can all agree that this is not exactly the dot-com bubble and this is not exactly the 2008 financial crisis. And we're not at either of these. And I really do think we're somewhere where basically we are dealing with a 1987 style panic. But if we don't get out of this very quick, it could turn into a 1929 style depression with this 30% unemployment. So for now, I'm still going to assume that we are on the trajectory of the 1987 crash. This was a presentation that I did back in 2016, which was actually kind of funny. I did this presentation at the Anarchist Conference. That's all about, stocks are going to crash, and you have to buy gold, And the speaker before me was George, Griffin. What's his first name? The guy that wrote the book, Creature from Jekyll Island? G. Edward Griffin. G. Edward Griffin. There it is. And he was the speaker that was on right before me. And he was like the keynote first speaker of the day, and I was the second speaker. And I literally started my presentation with the following. Look, I don't have the credentials as my prior speaker that wrote the book about the Fed, which to me was a little bit more conspiracy theory than fact. But here is what the market has done since the creation of the Fed. And I did a whole presentation about how your gold isn't going to go very far, but the Dow Jones will probably go to 100,000. And we're talking back in like 2016, when we were sitting here at 16,000, and we ended up doubling since that presentation. And to me, this sharp drop still feels like this 1987 little blimp that we recovered within 2 years. I still don't see this monster of 1929 on the horizon. That's my personal view at the moment. Going back to these two charts real quick, this is a 3-day chart in 1929. This is a daily chart in 1987. I don't know if we're going to dip below and make a new low, but I still think that we're going to draw this out into maybe as long as May, but I'm still anticipating a quick-ish recovery for new all-time highs in the stock market by, say, 2022, 2023. What do you think? Where do you think this is headed?
I think we are in more of a 1929 market than a 1987 market, personally. I think this is unprecedented in terms of, so 1987 was simply a stock market crash and the shock that comes from it. I don't think we've ever been in a scenario where we have this. So obviously in 1929, the issue was leverage. The leverage right now is, nothing compared to what we had in 1929. The only thing that makes me think that the stock market might be able to recover is that for the first time in human history, we're in an environment whereby governments will not let stock markets crash. So we haven't really been in that type of environment where governments are willing to do anything to prop up the market like they have for the last decade since the financial crisis. We entered the 2008 crisis because we were too leveraged, and the solution that we put to it was leveraging 10, 20, 30 times more now. And so really, the only thing that makes me think that we could enter into a normal market condition after an extended correction is the fact that governments, again, are willing to take the Ponzi scheme right to the end, right to the bitter end, where they chuck the entire financial system, every financial product, interest rates to zero, everything that they've got, they're chucking at it to keep the stock markets up. Eventually, that has an impact and that has an effect. And I do think that they've still got another round of financial engineering using digital currencies at the central bank level in order to try and prop up the stock markets to all-time highs again. And so I do think that we will see that return, just simply because the government have just shown that they're not really willing to let free markets prevail. They will intervene at all costs and at all expense. And I think they will, the health crisis was just an example of having to do that, really. And I think they'll keep that into the financial markets. But I do think that there will be some really big costs that come from this one, and that is the impact that it has on freedom, privacy, and many of the things that Bitcoin and the Bitcoin community has set out to solve. But yeah, I don't see it as this as an 87 market. I see it more as a 29 market.
I want to go to Simon on this next one real quick. One Simon, I've been getting a lot of praise offline on your commentaries. So people are finding them very insightful. But you hear a lot in the U.S. on the bailouts and what we're doing for the airlines and Boeing and other different sectors. We don't hear a lot of stuff like that going on in Europe. And is there stuff, with you being over there, is there stuff happening in Europe proactively towards the market to support the EU? And two, if that is the case or isn't the case, what do you see happening with the EU? Some people say, hey, the EU might just blow up from here if it doesn't get handled. What are your thoughts on that?
Yeah, we are seeing a lot of bailouts and similar situations. So governments all around the world are really, there were different countries that took it at different levels of seriousness. And I think it caught many of our leaders off guard. One of the things that I found a little bit frustrating is, as a Bitcoiner, you often get libertarian ideals, thrown, because it was a libertarian movement. But for me, this calls into question, for me, this is exactly what governments are for. And the reality is that the libertarian ideal meant that people were going out and spreading the infection, and it did need government intervention. And I've been getting a lot of criticism from the Bitcoin community for my thoughts on that as I've been sharing them. But yeah, governments all around the world have been doing similar things. In the case, I'm on a little island. We have 85,000 people. We've had 68 cases. But if you actually take that as, cases per 1 million population, it's actually quite high. We had our first death. I haven't actually got the government statistics, but it's a lot easier to control 85,000 people and put together policy to get the economy back on track. But, some of the things that we've seen in other parts of Europe, I think, in Italy, in Spain, I was actually in the process of doing lots of trade, not trades, actual, delivery and supply chains of with Spain and Italy at the moment. And, it's really been heartbreaking to see some of the suppliers that we're dealing with, actually how they've been affected by this crisis. It's actually been, the level of anxiety that people have been experiencing. I think in the States, the reaction was a little bit slower, because in general, it comes from a culture of, freedom and libertarianism, and that type of culture meant that, the people react stronger to, such an unprecedented time of what to many people feels like a real breach of their personal human rights as a result of this. But I think really Europe is a failed experiment. There is no United States of Europe here. It's just a bunch of countries looking out for themselves at the moment. And everyone's just trying to, as the borders have all been closed and all the planes are on shutdown, everyone's concentrating on their own scenarios. I don't think anyone's looking at it's kind of ironic with the amount of debate that was happening prior to this around Brexit and all that type of stuff and those words. It kind of feels like that having more independence in the current environment in Europe is actually something that can act more favorably to you. It's there is a lot going on everywhere in the world. Like what's happening in the United States is happening everywhere else. So at the moment, like in the case of the UK, like Boris Johnson, who's got coronavirus now, prior to that, he committed to essentially underwriting 80% of all businesses' revenue, and then also going through the individual, how they're going to deal with all the freelancers, all the contractors, all the people that are outside of the country that want to come back in, that can't come back in. The level of government support that has been required to keep everybody in and try and control this is just like unprecedented globally. So yeah, we're seeing a lot of that. But then there's the countries that we're not seeing much from. And the real challenge with this is that I think we've just passed 1 million cases and 50,000 deaths globally. And those numbers are completely off what the reality of this situation is, because the reality is that there's a lot of countries that just aren't testing, that aren't reporting. The reality is that this is, a really, really unfortunate situation globally. And the reports that we're getting are completely underestimating, how many people are in Italy right now that are actually just, passed away in their home, that are not part of those statistics. I personally haven't been able to get a test. I just haven't been able. It's not something that crossed my mind. I think many people that I'm speaking with, they feel like they've got something, but they haven't just been having these tests at the moment. So it really is a very tragic time in human history.
Hey, Simon, so going back to you, I do agree that the US and the Federal Reserve, and the fact that we have one currency in America, and we have one currency in Europe too, but the fact that we have like one language, one culture, and a unified debt across all the states allows the Federal Reserve to deal with the situation a lot better. Now, it's better for the Federal Reserve with their intense money printing, but I don't see it causing inflation in the US anytime soon, because more than $2 trillion have probably been wiped out by the shutdown of the economy. But Europe, I believe, is in serious trouble. I think the UK is getting out in the right time, because I think the euro common currency is in serious danger. And another thing I've been saying for years now, at least 5 years since I've been in the space, the breakup of the euro common currency will be one of the bullish things in Bitcoin ever. I think that is going to drive insane mass adoption, because if you're in Italy or Spain or Greece and the euro common currency is breaking up, you're going to try to convert those euros into something more trustworthy than your local new fiat currency. And Bitcoin becomes a huge safe haven for the Greeks and the Italians before the lira and the drachma come back. What do you think?
Yeah, and certainly, Britain was a really strange one, why they were the ones to do Brexit, because Britain actually had the best deal out of everybody. They got to maintain their own currency and their own central bank, and have all the benefits of Europe. So of all the countries to do Brexit, Britain was the weirdest one. The part that I've always hated about Europe is I think it's suicide for a country to put themselves under the control of a central bank that is not, culturally, their own country. It's just, there's the experiment of, I get the theory of United States of America feeling like one country with a state system, but, borders, water, cultures, wars, languages, just never led to the unification, and especially at the crisis level. But the bit, the free trade and all that stuff was all really good positive things, which Britain actually had. But then they maintained the bit that everyone else is stuck under the European Central Bank, which is a really, really suicidal thing for your country to do, especially in times when you need to use the balance sheet of the central bank in times like this. So it's really quite scary being under the power of the European Central Bank in times like this. It's a bit of a weird one. So I'm in the Isle of Man, which is, we're kind of dependent upon the Bank of England. So Isle of Man was the first country to try and support Bitcoin as a government. And there was a conference in 2014 where it was trying to allow people to pay their taxes in Bitcoin and create a small little island to stimulate the economy and create new jobs through creating a Bitcoin infrastructure. But one of the things that actually happened is that the Isle of Man government got essentially a call from the Bank of England saying, if you support the Bitcoin community, we will remove clearing for your island. What I tried to tell them is that you can actually use a stable coin. You can have all the benefits of digital currency. You can have the backing of the pound, and you can just create your own version. They print their own cash and coins so that they're not dependent upon that. But I know what it's like to have dependency. So in the case of the Isle of Man, it's actually illegal for the government to take on debt. So we have to produce enough tax in order for the government to meet its obligations. And at the moment, it's eating into its national insurance contributions in order to support businesses in this time, because it's going to be, it is going to have seriously negative effects on commerce at the moment. So I know what it's like when you need to rely upon another central bank, but then that's at the tiny scale. It's so much easier to manage a small community than it is, 350 million people or even 1 point. India is the one that really scares me. The 1.3 billion people there, that really does trouble me. But yeah, so the European, in terms of will Bitcoin benefit, it's troubling for me to say. And one of the challenges with the Bitcoin community is that the Bitcoin community think that they benefit from a collapse of the financial system. But the cold hard reality is that the financial system does need to operate and continue as usual, because the financial system is our grandma, it's our mother, it's our sister, it's our brother, and to think that in order for our Bitcoin investment to succeed, we need everyone to get hurt like that, it's just a silly thought. But what Bitcoin does do is, I believe, by giving people a choice where they can exit into a system that works outside of that system, is that it keeps the competition in a way whereby, the governments do need to create better fiat currencies. They do need to do better things. They do need to have better policies. And by having choice, I think that only enhances that. But to want the financial system to collapse so that the price of your Bitcoin goes up, one, is just a really bad thing for society. And secondly, it probably won't work out that way, because as people are struggling for finances, then they also struggle to acquire Bitcoin.
Yeah, no, I'm with you. I've been saying the same thing about the gold bugs. Like, they want the economy to crash and all their relatives to lose their jobs so that their gold may go up, which it probably won't anyway.
Well, let me ask everybody this: with the halving coming closer and closer, and I know some people in the world mistook the flash crash as the halving, but that was the wrong halving.
I have my portfolio. It already happened.
What are people's thoughts now that we've seen what's happened in the last 30 days with the market on Bitcoin? What the last halving showed us from a statistical point of view. Now that we're 60 days away from it, or close 45 days away from it or so, what's everybody's view? Are we baked in? Are we going to see a pump? Are we going to see nothing?
I think the halving is priced into people that know what Bitcoin is and understand how it works, and everyone was leading up to the halving. If they've experienced, you got people that experienced the last halvings, or people that are new to crypto, and then they've looked at the halving, and that was kind of factored into the price. What I don't think is factored into the price yet is the interesting conversations that arise due to the complete unique circumstances where we have, the massive amounts of attention and conversation after this health crisis. Obviously, most people are focused on survival, family, preparing, and trauma and also
confidence. Yeah, right. So the low confidence is going to definitely subdue any demand for entrance into the market.
Well, but the conversation that comes after this, let's say that we enter a continuous state of lockdown, the statistics start to become less depressing. And all countries are planning their exit strategy of how to let people out of their homes. Then at that point, I think we get the exposure to the financial crisis, and everyone's attention starts to focus on some of the things we're discussing on this show. Most people are not discussing these things. They're in just too much craziness to even think about finance beyond how do I buy my groceries and hoard right now. But eventually that conversation changes to, well, how did the government afford all this stuff? What are the implications of this stuff? And And really it becomes so much easier to explain Bitcoin to people in this environment. And therefore, I think that that's going to introduce a lot more people to the concept of halving, just due to the fact that people will be discussing things that under normal circumstances, no one's talking about government printing money and things like that outside of the financial space. But I think these conversations are going to be brought to the front of mind, and more people are going to contrast that. And so I think the halving conversation, while not going to be debated around the world by everybody, is certainly going to be brought to the attention of a lot more people that were unaware of this concept of a halving. And I think that's not factored into the price yet.
Again, if I may comment on your what you said about most of the people not aware of the or not going to really pay much attention, but if you think about it, if the wealthiest part of the humanity, they may actually jump into these things, and they actually, from their perspective, cryptocurrencies could be something that they would want to experiment with, at least, or get their knowledge base up to a certain level where they would understand what halving is. They would understand what's the difference between Bitcoin and Ethereum. And I think for these kind of family offices, high net worth individuals, could be the right time, and this is where we could see some of the entrance to the market.
I agree with that, and this comes full circle to the ETF conversation. Because the ETF doesn't exist, they have to buy Bitcoin, and they have to figure out those things. So to me, I think it's fortunate timing that the ETF doesn't exist in this time when all of those family offices and all those institutions are really going to research into this. In a normal circumstance, they would never have even looked into it.
All right. Hey, Simon, I got a question for you that has absolutely nothing to do with anything we've talked about so far. And this could be given the shortest answer possible. Because I also want to know the answer to this question. As an investor in blockchain, formerly blockchain.info, now blockchain.com, are they ever going to adopt Segwit?
It's pretty crazy that they haven't. I don't actually know the answer to that. I was before all this crisis, I was in their London office with Nick, and I should have asked him that question, but yeah, I'm pretty ashamed of the company for not having done that. It just seems ludicrous.
Well, I honestly, I think what makes it really, really bad is the fact that One More Peter, the CEO, tweeted in January 2017 that they were ready. I think that's what makes it really bad.
Yeah, it's strange. Like big blocks, I always call them blockchain.info. I can't get that out of my head.
Oh, I do too.
But they were really the first place that any of us went to try and download a wallet.
Oh, that's true. It was the first wallet I used until about mid-2014.
You started using a Bitcoin.com wallet after that?
Hey, I got a question to Simon. You guys have a lot of positions in esoteric investments from what Bank to the Future does in their participation in the startup function. With that being said, how are you? What's your feedback from whether it's your investors or you guys principally on the esoteric side of the market, and what that outlook, that resolve is going to be? Do you guys have any picture painted on what that looks like in the end?
In terms of the crypto, like the companies?
Yeah, for your portfolio.
Yeah, so I do a weekly show called Bank to the Future Live. So and I went live just before this. Right before this, I was going through all the different industries in the crypto area and how I think this affects them, and some of the portfolio companies more specifically. Then I was on Kaiser Report, and then I jumped over to here. So I think the big winners out of this. So we were looking at 7 different industries. Firstly, Bitcoin, I think, is going to be get an incredible amount of interest as a result of this. I think we're going to see. Crypto exchanges, they thrive on volatility. So the highest performing companies on Bank to the Future have been crypto exchanges. The investors that invested in the Kraken Series A to the Kraken Series B got a 200x return. Those that invested into Bitfinex got a 16x plus another 10x in dividends as they redistributed all of their profits, and other exchanges have been the highest performing out of this. So whenever markets are going up or down and volatile, then the crypto exchanges do well. Crypto mining is an interesting part. We have a current deal in the crypto mining sector right now. Interesting timing, because they secured investment from Peter Thiel and Winklevoss Capital to bring more mining, vertically integrated chip manufacturing, ASIC manufacturing, and they've created these cooling units that they were putting in Texas, which they said is one of the best electricity sources. So it's interesting to see that they were trying to geographically relocate some of the mining over to America, and then obviously like the situation and the politics between China and America as a result of this coronavirus is just interesting during these times that we were working on that deal.
Well, that's got to be affecting the mining industry on that side. So as far as isolation, bifurcation of exports.
Yes, certainly, and the supply chain breaking down, and these are certainly affected. The fact that many.
But it's almost over now. I mean, I've chatted to a number of mining groups, and again, as China sort of went out of the lockdown, things have started to happening. The deliveries started to happen, so things are getting very normalized, not just within China, but it's also outside of China in terms of shipping goods from there. So I think we're back to normal as far as that concerned.
Yeah. Hopefully we don't get second wave, but there's no way that we can trust some of the statistics that are coming out of China right now. It's just not possible to rely upon those in terms of. But yeah, in terms of the supply chain, that certainly seems to be coming on, and we saw it where the blocks went from 10 minutes to 13 minutes, and a 16% difficulty adjustment is again, it's starting to show the efficiency of how this system was created to adjust to this. Me personally, in my time, I've seen shocks like this, not quite like this one in terms of reasons, but in my crypto lifetime, I've seen my $30 Bitcoin crash to $3 in a very short period of time. I've seen my $1,250 Bitcoin crash to $250. More recently, I saw my $20,000 Bitcoin crash to $3,000, and people are starting to experience that. And we've seen these shocks, and the mining industry is resilient. It always bounces back, it always adjusts, and it's built into the algorithm. I think we're seeing a real increase in terms of wallet downloads at the moment. So we're shareholders in Exodus, for example, and Airbits. I think in terms of DeFi and lending services, I think we're going to really start to see what's under the hood, but behind those large returns that can be achieved in the lending services. Obviously, they got a real test in terms of the massive margin calls that they needed to do as a result of the price increasing and people having to have some of that collateral liquidated. So I think we're going to see some interesting on the peer-to-peer lending side that come as a result of this. But that's the DeFi side is a bit of a black box. I think we're going to learn more, and we're starting to experience more. Things like we were invested in the security token industry, companies like Securitize. I think we're going to see a delay in the adoption of more exotic products through security tokens. I think they're going to use this time, if they're well-capitalized companies, then they'll use this time to build a lot of infrastructure. But, so in terms of equity, we're expecting some of the companies to go bust, and we're expecting other companies to come out of this really, really strong.
I mean, when you pointed out, I mean, Securitize, I think what Carlos and the team down there has done has been fantastic. I mean, I think to your point, it's about adoption, but I think that the pool of liquidity and trading will come, and that will become a core base of asset trading is asset-backed tokens, and Securitize is so damn well positioned, man. What a great company.
Yeah, Securitize are probably one of the strongest teams that we've ever invested in terms of releasing products and just delivering upon their promises. And yeah, they're in a very strong position, definitely. But you know, security tokens is going to definitely take some time. At Bank to the Future, we were going to be releasing a security token exchange. We've shelved that product for now because we're seeing so much demand from new high net worth investors that want to just simply get into Bitcoin. And we're helping them, you know, with that process through some of our partner companies. And also then I think that they're going to, you know, we're seeing liquidity down in terms of investing in private equity. Some of our companies, like more established companies like Bitfinex and Kraken that have secondary markets through Bank to the Future, people are able to get severe discounted valuations relative to how well the companies are performing in these markets. And that's just a function of you know, equity markets and people's desire for liquidity. So it's producing some really interesting opportunities for the longer term, high risk, high return investor that wants longer term exposure to the fact that we believe that every single financial product is going to be reinvented by this industry at some stage. But it's going to take a longer time to get through this. Initially, it's back to basics. People want Bitcoin, and then they're going to want to diversify into equity in the industry. And then they're going to start looking at more exotic products like security tokens. But those are really correlated to what happens in the traditional markets, definitely.
By the way, guys, it's 8 p.m. in London, and everybody's out there clapping for the NHS workers. It's really hard to hear anything out there.
I can try and show you to see if we can see anything in the Isle of Man.
Oh, you can hear it here. It's like a...
Here's everyone in the Isle of Man cheering for the NHS.
Yeah, I don't know if you can hear it here. At 8 p.m. every day, everybody goes out to their balconies and cheers.
Really?
For the NHS, yeah.
Everyone claps.
That's classic, Dinesh. Classic.
George, the Tower of London in the background. Beautiful.
So that's every day.
George lives in like a really nice apartment that
Don't forget, text Mark
overlooks the
He'd
rest
like to
of
talk to you about what the
London.
federal government could.
Okay.
In my experience, there's been 3 waves of entries into crypto. One was Simon was part of that wave. That was like the 2011 guys, you know, Max Kaiser, you, Simon, Roger, you know, the Trace Mayer, like all of the ones that are probably still considered OGs. I'm not sure what your definition of an OG is, Simon. I think I'm getting to be on the border. I think I have a definition for what is a Bitcoin OG. If you've been in Bitcoin longer than half of its lifetime, you're a Bitcoin OG, because then it kind of expands, right? So when Bitcoin is 20 years old, if you've been in it for 10 years, you should probably be considered an OG. So that's
I think Tone has traded Bitcoin since 2004. Not sure, but I think so.
So, I mean, there was that wave of like the 2011 guys going into that $30 bubble. Then there was the wave that got me in. It started with the Cyprus bubble, and that wave went into the 2013 market bubble. So that was wave number 2 of people, and so many people got in that 2013 zone. And then the third wave of entry. What's up?
What about the Silk Road closure? Would you call that the same time?
You know, the Silk Road closure, that's an interesting one. See, I remember that day so well. I don't think the Silk Road closure got Bitcoin in. I think it's what happened the following week. Everyone remembers the Silk Road closure, which happened October 1st. I remember that day. The price of Bitcoin fell from about 120 down to $80. Within 3 days, it was back to 120. But it was something that happened about a month later. And that was the very first Senate hearings in the US about Bitcoin. And those Senate hearings literally drove the price from about $300 to $800. I think those Senate hearings that happened just a month after the Silk Road closure did a lot more to put Bitcoin on the radar than the Silk Road closure itself. Because contrary to popular belief, not everyone needs the substances that Silk Road was selling. Like, for example, in my case, the Silk Road was never, I know no one believes it, but Silk Road and that use case for Bitcoin was never like on my radar. Like, I've never done any substances. Like, that was never a use case for me. And it isn't for a lot of people. And I was working on Wall Street, contrary, and so was Dinesh. And contrary to popular belief, not everyone on Wall Street is like Jordan Belfort, right? Like, that's not what actually goes on there.
It is not a thing. Like, it's not Jordan Belfort's situation was like in the early 80s. Like, it's not like nobody like rolls into like fucking the street.
Right. Well, like I've never seen anyone do cocaine in front of me in the 10 years I worked on Wall Street. It only took me about, I don't know, a month in the Bitcoin space. So let's.
What was the first thing? You did the first two.
What's up?
The third wave of adoption, you did the first two.
And the third wave of adoption was the 2017. And it's amazing how many people got in 2017. And each wave of adoption is about 4x the amount of people that show up than the prior one. And that second, I don't know what caused the first wave of adoption to, eventually bottomed out. It might have been the halving event because there wasn't too much happening in 2012. But I remember in 2014, the final major event that kind of gave life to those that sat through a year and a half bear market was the Greek banking shutdown. And I think what is happening right now is that equivalent to those that got into the 2017 bubble and perhaps still sitting on a losing Bitcoin investment. They are watching the current, money printing scenario, the current economic implosion, like I was watching the Greek banking shutdown in 2015. And I think this is the end. And, the final, I guess, like sigh of relief for those that got in the 2017 bubble as to why they're in this space to begin with. And I think towards the second half of 2020, we're going to start to get that fourth wave of adoption.
Yes, I'd say that the class of 2017 in crypto was young people that were never going to be able to buy stocks, bonds, get a mortgage, didn't save for a deposit. Maybe they were about to go to college. They were in debt. And for the first time, they found a financial product that interested them. And they started speculating on ICOs and crypto and all that stuff. So I'd add one in between, actually. The 2016 was when Blythe Masters went around every single fund manager in the world and told them that it's blockchain, not Bitcoin. And there was an interesting story behind that one because it was really fortunate timing. Blythe Masters was telling everyone that the creator of the credit default swap, she was telling everyone that Bitcoin shit, blockchain's good. And
you and I are still here, and she's gone.
Yeah, exactly. Yeah. But the Jeffrey,
what happened to Blythe Masters? She was like the biggest
Mythbusters. I think she did an exit.
Gone.
They sold Hyperledger, and that's it.
Yes, but it was really strange timing. But Jeffrey's investment bank was doing like an educational series, and for some reason my name came up on the radar, and they sent me to every single buy-side fund manager that you can imagine, probably controlling 80% of the world's wealth in terms of assets under management. And they asked me to sit down and do a one-to-one with them on Bitcoin. And they were all coming from the Blythe Masters meeting. And essentially she did the indoctrination of blockchain, not Bitcoin. And I was there to do the opposite of Bitcoin, not blockchain. And so many of them, they didn't invest in their funds, but so many of them in their personal money invested in Bitcoin, because it was really the only blockchain that they could actually acquire the asset for, because everything else was theoretical. So I think that whole, the banks trying to take over the word Bitcoin and call it blockchain was a massive wave of adoption that really went the opposite direction than they wanted it to go. Let me ask everyone a question. At what stage? I think everyone in this situation went through different levels of consciousness in terms of what this means. Like, at what stage did each person decide, okay, this is pretty serious. I need to stop traveling. I need to actually, protect myself and take this seriously. Or maybe some of you are not there. Like, what was the trigger for you deciding that this is something a bit more serious?
The trigger for me was when I caught it.
When I saw the frozen White Castle burgers starting to be depleted at the grocery store, I knew there was something happening.
I'll answer last. Go ahead. I'll let.
It hasn't happened to me. I think I don't have it.
Well, I'll tell you when I should have taken it more seriously. When I watched the little video, like, I get a lot of like conspiracy stuff, and you scroll through Twitter, and I watched the video, and this would have been probably probably late February, very early March, and like the Chinese like authorities are literally like putting nails and like locking people up in their buildings and like dragging people as they're screaming into buildings and like locking them up. That's when I should have taken it more seriously. But I started taking it seriously. I was still in South Africa, and I knew that the US is about to, because of the US libertarian views, the US was gonna be kind of loose on it. And I was watching what's going on in Italy, and I'm like, well, it's gonna be disaster in the US, especially LA, New York. And I'm like, hey, maybe I'm safe here in South Africa. And then I watched for 3 days in a row as the number of cases in South Africa just doubled. It went from like 4 to 8 to 16 to 32 and to 64. And I'm like, shit, I better get on the next flight out of South Africa. As nice as it is here during the summer, I don't want to get stuck here for 6 months. I'd rather, be in the US and locked down.
Yeah. You might not know what the $1,200 thing is on the cast. So Ben or Tao, do you want to recap like what the $1,200 thing is, so to let people know?
Hey Ben, just before you go through that, I'm gonna have to call it a night. I've really enjoyed meeting everybody. And
awesome, Simon. Great chatting with you, man.
All right,
guys, I gotta jump off too. Thank you very much.
Hey, thanks, George.
Bye, George.
Thank you, guys.
Good having you guys.
Thank you, guys.